Hey friends, Scott Smith with the Smith team at Keller Williams. Wanted to share with you a recent story and a conversation that we had with one of our clients that was feeling stuck with a sub 3% mortgage. If you're like a lot of people that bought 3 or 4 years ago, you've got an amazing interest rate and you're sitting on it, but maybe you love the rate, but you're not loving your housing situation. And here's a great real world scenario with some rounded off numbers that'll help kind of paint a picture about a way that you can maybe step up to your next home without feeling the pinch financially. So I wanted to share with you a client that we worked with. They bought, had a great rate. Their house currently would be worth about $400,000. And for round numbers, they were going to move up to about a $600,000 house, but they're still sitting on that 3% mortgage rate over 30 years. And they're thinking, can we afford the next home? So we crunched some numbers and really came up with a great scenario for them to put their equity to work for them. And in their case, they had about $100,000 in equity, and they're looking at stepping up to that $600,000 home. So they've got a nice down payment to roll into the new place. And with that, we really looked at what their monthly payment was. Yes, they were sitting on some great equity and a low rate, but they didn't know how to put that equity necessarily to work for them. So the scenario that we worked out for them, their monthly payment changes about $600 a month, which sounds like quite a bit. But what we're looking at for interest rates right now, where a lot of people just don't understand, is those interest rates are actually almost at a 12-month low. So we're seeing a lot of interest rates that are being quoted in the mid 5% range. So with this client, we actually looked at a scenario where we could buy down their interest rate for the long term, put some of that equity to work for them in that case. So if you're looking at possibly making a move up and you're feeling stuck in that interest rate but not loving your home, here's a couple things that I want to just share with you about, just to talk about possibly moving up to the next place. Number one, the affordability is more than your interest rate. So looking at your entire home budget, whether it's utilities, HOA fees, if you're looking at auto payments, if you have some student loan or credit card debt, putting some of that equity to work to where maybe you want to pay off some of those things and roll it into the next place. So affordability is more than just your mortgage rate. The second thing is what I had mentioned earlier is that equity in your home is just sitting dormant. Put it to work for you. You might be sitting on a great interest rate, but you've got a ton of equity, and you could actually step up to a new place because you've got that low rate. You've paid down your mortgage balance over the last few years, and you've got great appreciation. So roll that into the new place, put that equity to work for you. Getting an affordable rate in the 5% range isn't that much of a stretch if you really crunch the numbers. The fourth thing I wanted to share with you again is what I touched on earlier is the interest rates, mortgage rates. A lot of people, one of the first conversations we'll have when we bump into someone at Target or the grocery store or Menards is, how are the interest rates doing? Boy, that people must not be moving. But actually what we've seen is quite a bit of movement recently with mortgage rates. They're sliding down quite a bit. The 30-year conventional rate is right around 6%. We're expecting that in 2026, they're going to be at or below that 6% rate. But we're seeing some clients that are taking advantage of that slide and looking at buying down that rate into the fives so that monthly payment could be a lot more affordable for them over the long term. The last thing I want to share with you is just a lifestyle. Are you in the home that you want to be in for the next 5, 10, 20 years? And a lot of those people that we're working with, we specialize in working with those families that are moving up from one house to the next. Is great starter house, but they've outgrown it. They really don't want to put any more money into that home, and so they're looking at maybe stepping up to the next place. And it's a real world scenario, moving from a $400,000 house to a $600,000 house. It's a natural transition, and then they're getting into the home, the neighborhood, the location that they want to have for the long term. So looking at that lifestyle, is this the place where you want to be long term? We're happy to have a conversation with you and your spouse. If you're looking at making a move up to the next place, reach out to us, 651-777-3434. Connect with us online. We just do a quick equity review for you and crunch some of those numbers to see how that might work in your situation and where you can move up to your next place. Thanks. Have a great day.